Welcome back, beautiful tri-state area. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Up next in our financial literacy segment brought to you by OGPay.com and Caldwell Soames, today we're featuring Ashley Fox, a former Wall Street analyst and expert in the financial education space. She is the founder and CEO of Empify, a fintech startup that is revolutionizing the way adults and children learn how to build wealth. Empify and its membership based Wealth Builders community app is literally the Netflix of finance. They're focused on creating life altering programs and informative digital content curated to teach all aspects of financial education to adults and children. Empify has helped thousands of adults and children become first time investors. Their programs have been implemented in hundreds of schools, prison systems, and organizations across the country. Her work and story have been featured on Jim Cramer's The Street, Yahoo Finance, CNBC, Fox News, ABC, Huffington Post. That's just to name a few. Today, she joins me right here to chat financial literacy, the American survival story, and why it should matter to you. Welcoming now to the show is the incredible Ashley Fox. Welcome, superstar.
Hi, how are you? Thanks for having me.
Absolutely. So let's jump right in. Everybody wants to know from an expert like you, what is your assessment of the current state of the US economy and how does it compare to the pre-pandemic period?
So I would say during the pandemic, it was very sudden. I don't think we could prepare for anything like that. But during that time when a lot of people were getting stimulus checks, the government was printing money. And anytime that happens, that causes inflation to rise. So now we're in an era where inflation was high and they're trying to decrease inflation. And in order to do that, you have to raise interest rates. So we're in a space now where while our savings accounts, our interest rates might be going up, so are our debt payments, so are mortgages, so are student loans, car loans, business loans. So we're in a space now where people might be spending, but they're really going to start to feel that their debt payments are going to go up. And what happens is if consumers stop spending, it impacts businesses, which directly impacts the stock market. I personally enjoy seeing times like this when everything is going great, nobody really pays attention. But when everything is like all in the news and things might be going bad, people start to get scared. But teaching financial education, the first thing that people want to do is one, get very clear on where their money is going, but also how their money is working for them. Because while I'm an investor in the stock market, I think we're giving our money to these $1 million, $1 billion businesses, but we got to start thinking about how can I own these businesses? If stock prices are down, the economy might not be its best. This is the time where things are cheap. So while the news may frighten people, I think it's the best time to learn. I think it's the best time to learn how to start investing, because when the recession that we're into, or whatever they want to call what we're going into, what we're in, once we come out of that, you have the ability to make money. So I think one of the biggest things we have to do is really pay attention to how we're spending, how much debt we're taking out, but also challenging yourself to learn, to grow, to learn how to invest in the stock market. Because as things could get better or worse, you are in the position to learn, you are in the position to invest. And even if you want to start with like $50, get into a space where you're starting to think about, can I own some of the businesses that I'm always giving my money to, no matter the state of the economy?
Well said. Well said. And you know what? Knowledge is power. Education is key. Financial literacy is at the core of it all. And I'm so glad that you teach this and that you preach this and that you practice what you preach. Now, what key economic indicators, and we don't have to go into too much detail, should people really be looking at, people and businesses monitoring to gauge the health of the economy for strategic investment planning?
I think the easiest thing, if you're just, even if you're a beginner, is interest rates, right? So what happens is, look at the Federal Reserve like a merry-go-round, right? The merry-go-round, the ride is the economy. If it's going too fast, just like a merry-go-round, it's not a fun ride. And if it's going too slow, it's not a fun ride either. The Federal Reserve is the person manning the merry-go-round, determining the speed. And the way they determine the speed is by raising interest rates or decreasing interest rates. So the more interest rates rise, the more pressure it puts on companies and the more pressure it puts on consumers because of debt, right? So I would say if you are a beginner, that's one of the biggest things to pay attention to. Are interest rates continuously rising? Is the Fed not going to raise interest rates? Are they decreasing interest rates? Because while it doesn't seem like something that impacts everybody, you start to feel it over time. And so monitoring your interest payments on your debt, on the savings accounts that you have, and really getting crystal clear on how you're going to manage your money. Because it looks like people are spending money based off of the data, right? I was in the airport the other day. People are still traveling, people are still shopping, but it's also being cognizant that we're not going too far into debt that we're not able to handle it. And if interest rates continue to rise and we really start to feel the wrath of what the Federal Reserve is trying to change, we have to be able to be prepared. But again, this is the best time for you to learn, for you to invest as we start to really evolve in this economy, because the goal is to get out of this. Like we don't want interest rates as high as they are. We want them to go back down. But in order to lower inflation, the cost of everything, the Fed has to raise interest rates and really monitor that merry-go-round so that it's not going too fast and it's not going too slow. So I would say really paying attention to interest rates, and on a deeper level, your interest rates, your bank accounts, your credit cards, your student loans, your mortgages, your car loans, and really determine if it's a fixed interest rate or variable interest rate. Because if it's fixed, it won't change. But if it is variable, it will move as the economy starts to go down or go up based upon what the Fed chooses to do.
You break it down so simply. That's why you are the expert at what you do. And it all comes back to paying attention, listening, observing, and then reacting, not just being completely reactive based off of what the feds
Yeah.
are doing and not doing, right? So, really taking the time to absorb the information presented. Now, let's chat ETFs. Those running ETFs, exchange traded funds, private market funds and sustainable investments are expected to attract the biggest inflows, and this is according to market analysis reports. Now, the growing adoption of actively managed ETFs should come as no surprise. Major active mutual fund providers have entered the ETF fray by converting or cloning existing mutual fund strategies or adding new strategies. Now, the improved tax efficiency of ETFs is a quick win for investors. I say we're going to see much more choice in the active ETF realm. There has been a lot of choice in terms of individual funds, but there are going to be more knobs and dials in portfolios so investors can better control their exposure to taxes or ESG, right? Environmental, social, and governance factors, or even other personal preferences. How do you feel about ETFs and what are your thoughts on this?
So I think let's first address what an ETF is. So the easiest way to understand what an ETF is imagine you there's a basketball team, right? You can invest in one individual player, which is like buying an individual stock. An ETF says, hey, I don't just want one player. I want to pick a bunch of different players from the NBA. And I think if you put that team together, we could really win some championships. And then the person who's managing the ETF is the coach of all those players. So essentially, you would invest in an ETF if you don't want to or don't know how to pick the individual players that you want to help make you money, right? And so I think it's a very unique way to get all the players in one, but for one price in an affordable way. So for me personally, I like to pick individual players, right? Like I think I'm really good at buying and holding. That's the type of investor. So I'm not really trying to flip my money and like really get rich quick. I'm more of like, hey, I like this player. I'm a rock with this player because I believe that you keep them, you have them in your portfolio. Over time, they can evolve, right? Now, when it comes to people who are beginners, ETFs definitely are a great way to get exposure to different types of investments because you can buy a real estate ETF. You can buy a consumer staples ETF, right? You can buy. I had a social media ETF. So I think it's knowing what industries you like, what companies do you want to own, where you say, hey, I might not want to pick individual companies, but I do want to get a different industry. I like this industry. I like these companies. I like certain dividend paying stocks. I like this type of ETF. So I think it's a great way for people who don't want to pick individual investments, those individual players, because they may not know or have the time to rely on an expert, that coach who does pick those individual players for them.
I love your analogies. You make it so simple because now people can actually understand. When you talk about fast cars, people get it. When you talk about sports teams, people get it. When you talk about ETFs, they're like, huh? So you broke it down very nicely. So now let's chat financial literacy, but I want to focus on specifically for women. So many Americans are functioning in today's environment with a poor level of financial literacy, and this is more true among women than men and more true among underrepresented minority women than their white peers. Especially problematic in today's environment is the finding that financial literacy is particularly low in the area of comprehending and understanding risk and uncertainty, which is what you talk about. Now, on average, US women correctly answered only 1/3 of the index questions related to risk and uncertainty. The same holds true among African American and Hispanic women. Now, this means that these ladies are ill positioned to make decisions in a time when uncertainty and volatility dominate economic and financial life, which is the current state. How do we shift this narrative, Ashley, and why does it matter?
So I think we have to first get to a space where we were born in an economy that has taught us to go to school, get a job, and get a job so that we can pay for school. And nowadays, that's not the only thing. I mean, you can make money on the times are just different, even when I was back on Wall Street. And it's getting people into a space where you recognize you cannot save or work your way to wealth. I'm sure we all know people who work really, really hard. They may have saved some money. They might even own a house, but they still aren't wealthy. And I think it's about letting go of who we have been to then define who we want to be to step outside of our comfort zone. And I think in the only way, I always tell people there's two ways to build wealth in this country. You invest in your own idea or somebody else's idea. That's it. Now, I run my company, Empify. I quit my Wall Street job. I went through a lot to get here today. I've been in the industry for over 15 years, but not everybody wants to get kicked out of their apartment, have to start all over. Like, not everybody wants to do that or is willing to do that, but everybody is okay with spending money. We are phenomenal at spending money. We don't have, like, if I taught a class on how to spend money, nobody's coming because we've mastered that. But why are we investing? Right? And it's one, because of fear. There's this fear that we're going to lose money, but on average, the stock market is positive and it's up more than it is down. But then you have to ask yourself, why is everyone preaching investing and I'm the only one who believes I'm going to lose? Which means that there's a confidence issue around that as well. So I think it's more of enhancing our self-belief to say, hey, no matter what I have been around, what I have been taught, I'm going to change my life and I'm going to do more, because if we also got to recognize too, America doesn't work if we don't spend money or take out debt. So if I've mastered spending money, that means a company that I'm giving my money to is winning, right? Well, what if you ask yourself, what if I became part owner of that business? That's what buying a stock is. And so it's getting people out of the mindset, hey, I'm just going to save, because you can't save your way to wealth. Saving is great, but it's not going to give you the freedom that you're looking for. So it's positioning yourself to say, hey, I know I can do this. I'm going to learn, I'm going to grow, and I'm not afraid to start small. So many people think because I don't have a lot, I'm not worthy of building wealth. Wealth doesn't have a color. Therefore, it looks like all of us. It doesn't have a gender. It looks like all of us. So putting yourself in a position to say, hey, I may not have thousands, but I've got $20. And there are accounts and resources out there where you can, some of the biggest and best companies are less than $200. And we spend more money with these companies when it costs less to own the company. And so it's getting into a space where you recognize, I can start small and build big, but I'm going to start today, because not starting at all is no longer an option for me.
Preach. You said it, sister. Now we have about a minute left, so we're going to speed through this as fast as we can. And if not, have to cut to a commercial break and come right back. But what advice do you have for individuals who are looking to save for retirement, especially considering this changing economic landscape?
So I challenge people to start small and build big. If you have to consistently set $50 a month, let's $50 our way to $1 million, but also get clear on how much you need to live the life that you want, and then work backwards. Because we don't recognize that by the time we live a certain life, the cost of living goes up every single year. So it's getting clear on, if I want to live this life, how much do I feel comfortable with having every single month? But what if I live until age 85, 90? Now, how much money do I need? But also start to consider, if retirement is a focus, start to consider different investments that pay out dividends, because now you're allowing yourself to invest in companies in different investments that allow you to accumulate passive income that you can live off over time. So again, the biggest thing for me is get educated and to just start. Learn as much as you can, but put yourself in a position to not be embarrassed for setting aside $20 towards your retirement. You're not behind. You're not a bad person. You are in the right place at the right time to do what you're ready to do at this moment.
You are a motivational speaker, not just a financial expert, girl. Now, what resources or educational tools do you recommend for individuals who want to improve their financial literacy and really better understand the economy?
So I would say taking different classes, following different people on the internet. Now, you want to follow people on the internet, but you don't have to do everything that they're saying, but consume the information. There's a free class that I've been doing for a lot of people who are beginners who want to build that passive income. So you can go to cashflowcreationtraining.com. There's a ton of free resources that I offer, but put yourself in a position to learn a new language. And when you learn a new language, you have to read it, you have to speak it, and you have to immerse yourself in it. So challenge yourself. While it's uncomfortable, I'm going to take that class and I'm going to challenge myself to understand, because my livelihood and my financial future is dependent on it. But you can go to our website, empify.com, or Cashflow Creation Training. We have a free class helping beginners start to really learn how to invest in a simple and easy to understand way.
Girl, I love everything you're saying. You are fantastic. Thank you so much for coming on.
Thank you for having me.
Oh gosh, she's incredible. That was our Business and Buzz segment brought to you by OGPay.com. That was the incredible Ashley Fox. You can check her out on the gram at _Ashley M. Fox. You can check out her incredible company at Empify, and you can go directly to cashflowcreationtraining.com. Now, one thing is certain, the US economy is a large, complicated machine that can sometimes defy expectations. And the levers the Federal Reserve uses to fine tune that machinery are imperfect. So even with the Fed's clearly defined plans, it's anyone's guess exactly how the economy will respond to its maneuvers in the near term. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.
A Moment of Zen is brought to you by Caldwell Soames Incorporated, investing globally in transformative businesses like Original Digital Corporation, or ODC. ODC develops advanced consumer and commercial fintech solutions such as OGPay, which will transform the way you manage your money. From sending and receiving money globally for free, paying for goods and services in person and online, pay bills, buy and sell digital currencies, all while earning interest. OGPay is easy to set up, FDIC insured, and your information is secured. Check out OGPay.com.